the Financial Survival Network, helping you to survive and thrive in the new economy. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. As you know, we've been doing a series of interviews with mining company CEOs because there's no other sector, in my opinion, in the market that is as undervalued and underappreciated as this one. And with us now is John Burges, he's CEO of Northern Freegold, a Canadian miner on the TSX Venture, and here to talk about what's going on with Northern Freegold. Hey, John, how are you today?
I'm doing great. It's it's a good day when gold's up $50 over the last couple of days.
Yeah,
Bernanke supporting QE3. So it's a very positive move for commodities and metals, and we will assume at some point that'll come through to the mining stocks more broadly. It certainly had a good impact in the last day or two, but my sense is there's a lot of money sitting on the sidelines waiting to see where QE3 would go, and that's going to probably filter down to the junior resource companies at some point in the near term.
Yeah, there's no surprises, I guess, with all the dire financial situation of all of the major economies in the world, even in Asia, that money printing seems to be what they do best and the only bullet left in the gun.
Well, they're going to try whatever they can, obviously, to deal with the issue of a lack of growth, particularly in the developed nations. And printing money is a tried and tested method. We all know and we've seen the consequences in the past, historically, over several hundred of years. So I don't see that it's going to be any different this time going around. So I think for gold. A predominantly gold company, we're about 65% of our metal value is gold. The balance is copper and molybdenum and some silver. But for a predominantly gold company, I think that's very positive for us over the next sort of 12 to 18 months. Hopefully that'll underpin the metal prices. And then longer term for us, obviously, it really comes down to the type of asset we have and the location and what we as a management team can do to develop our project.
Absolutely. And tell us a little bit about Northern Freegold Resources.
Sure. It's we're a listed company based in Canada, up in Vancouver. We trade on the Toronto Stock Exchange Venture. Ticker symbol is NFR. We also trade on the OTCQX, where the ticker's NFRGF. We were formed in about 2006. So been around for 6 years. The company has a very sizable existing gold and copper and molybdenum and silver resource in the Yukon. So we are operating in Canadian jurisdiction. It's low risk, doesn't have any of the resource nationalism issues that you've seen in some of the more unsavory countries around the world. The Yukon is a old historical mining district going back over 100 years to the original gold rush there at the end of the 19th century. So, you've got a history of gold mining. So we're operating in a known area with known mineralization over a very large extent. And there are lots of mining companies operating in our jurisdiction and near us. It's copper mines owned by majors like Capstone and silver mines from companies like Alexco. So, it's a good place, a good environment. The Yukon is in northern Canada. So one of the key issues is infrastructure, and we are very well situated. We're on a government-maintained road, a few-hour drive north of the capital, so we've got very good access to the key mining service providers like drilling companies, assay laboratories that are all located in the capital in Whitehorse. The project itself is large. We are now the second largest gold and copper resource in the Yukon. If you look at this on a worldwide basis, the ounces we have in the ground would probably put us in the top. On a combined basis with the two deposits we have, we're probably in the top 300 in the world. So, I mean, this is a pretty sizable resource. We have in total 3 million ounces of gold, indicated and inferred, across two deposits. And we have over 400 million pounds of copper and another 90 million pounds of molybdenum and some silver. So if you look at it on a gold equivalent basis, it's around 6 million ounces of gold equivalent. Again, very sizable existing resource. And the key issue is that's not all we're going to find. I think we've got a lot of potential based on the footprint of those two deposits in the Yukon and the land that we have. We control over 200 square kilometers, and the ounces we have are only spread over about 30 kilometers so far. We think there's a lot of upside to increase the tonnage and the ounces that we have over the next 12 to 18 months.
Yeah, so it's clearly a world-class deposit, and it's kind of interesting because you got into this company with having a Wall Street background. Just tell us how you got into the company.
Sure. Well, you know, I've been on Wall Street for probably 18 years with groups like Merrill Lynch and Deutsche Bank, but I also had experience running private resource companies before, and also co-managed an investment fund. So I've got sort of investment buy-side experience. The Wall Street roles had given me some exposure in the last sort of 10 years with public resource companies, and particularly the Canadian juniors. I worked with a number of them as clients of mine, groups like NovaGold, and was approached by some board directors who I had worked with previously, one of whom was on the board of Northern Freegold, and they approached me regarding the CEO role. The opportunity looked interesting for a number of reasons. What really attracted me to this was just the valuation. If you look at the amount of ounces we have of gold, around 3 million indicated and inferred, we've got an enterprise value of approximately 17, 18 million. So we're trading at less the cash, just over $4 a gold ounce in the ground. So that's a very, very low valuation. And that's for a company, operating in a safe jurisdiction in Canada. So when I looked at this and evaluated the proposition, it really came down to what were the risks. Junior gold minings clearly are at the more speculative investment end, and there are certain things that can go wrong. But when you've got an existing resource of size, with good infrastructure around you, with a potentially a fair amount of blue sky to grow the size of that resource, to me it looked like a really wonderful opportunity to come on board at a fairly low price. And I made that decision at the end of last year. Obviously, I can't control the macroeconomic environment, so we had a tough and challenging 6 months with gold prices falling and resource companies somewhat out of favor, but that seems to have turned in the last month or two. And, for us, the project's developing very rapidly, and we had, lots of exciting news coming out. So I think for us, it's a good place to, for me, it's a good place to be.
It sounds great. And you also got some really good news in the past couple of days.
Absolutely. We put out some very encouraging metallurgical results demonstrating the value of the gold, copper, and molybdenum we have in silver. When you have a deposit, one of the key questions obviously is how much do you have, how many ounces do you have, but the second question that is usually asked is metallurgy. Can you recover that? What are your recovery rates? And we just announced a revenue, which is a gold, copper, molybdenum deposit, that we have very exceptional recovery rates of 92% for copper, and over 81% for molybdenum and 74% for gold, which for the type of deposit we have, which is a gold copper dominant porphyry, those results compare very much in the very top quartile of similar porphyries in North America. So I think we are extremely pleased by the results. They are preliminary, and typically we would do more lab work and hope to improve on those numbers over time. But we're encouraged by it. We will be putting out news in the next couple of weeks on the other deposit we have, which is right next to it. It's an adjacent deposit. That's Nucleus, and that is a gold dominant zone. It's about 80 to 85% gold. So that will be metallurgical work on that deposit coming up. And this is, this has been a 6-month exercise. So for us, it's a key milestone in the evolution of the company to be able to demonstrate not only to the market, but also down the road to potential mining partners that we have very strong metallurgical recovery numbers. It was very critical to our development.
Yeah, and that kind of brings us to the next topic, which is long-term strategy, the company and the management that's in place to take advantage of that strategy or implement it.
So, we've got a very large resource already, but we really want to see if we can double the size of the tonnage and double the size of the ounces we have. For a gold dominant porphyry, it would be good to get towards 5 million ounces of gold. So the question in our minds is how are we going to achieve that? And then if we get to those size of numbers, you really are in a very world-class category for a deposit. These projects, though, when you turn these into a mine, are going to require a fair amount of capital. So to go from where we are today to continue to drill the property, this is something we typically have financed ourselves. We own 100% of the asset, and we've just used the public equity markets to achieve that end, to raise the tens of millions that we've raised. We've got approximately 35 million of capital invested in the Freegold project to date. So looking forward over the next 12 months, if the equity markets remain strong and good, we would continue down that path of having achieved, say, the metallurgical milestones. There'll be other milestones we want to achieve, and then look to raise some capital to fund future drilling with the objective of growing the tonnage and growing the ounces, as I mentioned earlier. That said, in terms of overall strategy, we believe we're sitting on a very sizable deposit, and we think it probably is going to be of interest to major producers down the road. And we need to also consider the amount of capital that a mine or deposit of this size might require to turn it into a mine. And, this is going to be a multiple of hundreds of millions of dollars. So obviously, given our market cap size, we need to be cognizant that, a junior miner may not be the best guy to end up being the construction and end up being the producer of the ore and the ounces. So we have begun to look at potential joint venture partners, and I think what we would like to do is, in parallel with developing the project over the next 6 to 12 months, also look at potentially tying up part of the project with a partner who can assist us. So we'll start that process. We'll see whether or not that what it leads to, but it'll give us an option that if the equity markets are weak, that we can at least potentially turn to a partner to work with down the road.
Yeah, it makes a lot of sense. And if the price of gold keeps going up, hopefully the markets at least won't go down anymore and probably will go higher. And it's really exciting news because you're sitting on something major, and it sounds like it's only going to get better. As far as the company's finances at the present time, how did they look?
Well, we actually raised some money about within the last month. We raised $1 million. And, our stock's actually done pretty well on the back of that. So we're now fully financed really through to late second quarter next year, 2013, which enables us to do a number of things. One is obviously we can complete our metallurgical work, drilling and exploration program for this season, and then very importantly move forward with a key milestone, which will be putting out a first economic assessment or engineering study, which is called a preliminary economic assessment.
Sure.
So once we've got the final metallurgical results, we can and update our sort of scoping study with those numbers, and we'll start work on that PEA and look to have that out at some point in 2013, which again, I think would be a key milestone for the company, being able to demonstrate the economic value, the net present value of the property. And obviously we'd hope to see that was a large enough number that compares very favorably to, say, our current market cap.
Yeah, it sounds really exciting, and sounds like you've got a full plate, raising the capital necessary, building the relationships to exploit the properties, the projects, and eventually getting it into production, as well as still maintaining an exploration program, huh?
Well, the property is very large. We've got 200 square kilometers, which is roughly 3 times the size of Manhattan in New York. So it's a big property. We've got multiple zones where we've got existing 43-101 compliant multiple resources, and then we have 2 or 3 other zones where we started drilling and have certainly found some very interesting mineralization. We have another zone called Tinta, which is on the eastern end of the property, and we've got some higher grade material there. So the fact that we've got multiple kind of deposits and multiple discoveries on the property, which remains very large, does certainly give us some options in developing the company further, whether it's focusing just on the revenue nucleus gold dominant porphyry, or whether we over time can look at some of these other areas, for example Stoddard, where we've had some pretty interesting copper drill results going back over the years. So we're excited by the property, and it's a great location with close access to electricity grid, and we're on a government-maintained road. So again, the infrastructure is very advantageous for us compared to a number of other groups up in the northern part of Canada, where logistics is key. If you can kind of get your drills and equipment in and out, because you have a road, you're obviously going to be saving a lot of expense on drilling. So our drilling costs are very low compared to other companies. Yeah,
that definitely is a plus. Well, it sounds like 2013, the road ahead, it's going to be some major breakthroughs hopefully this year, and if we have a cooperative precious metals market, so much the better. So people want to find out more about you, about Northern Freegold Resources. Where do they go?
Well, we've got a website, www.northernfreegold.com. And on that website, you've got on the home page corporate presentation, which you can download. There's a more detailed technical presentation for geologists, a fair amount of information about the deposits we have. And so that would be the primary source for potential investors to take a look at.
All right. Well, hey, John, it's been great speaking with you, and thanks for sharing that with us. And we'll be following Northern Freegold, and hopefully the market will come to realize the value, as did you.
Gary, I've enjoyed the conversation. Look forward to catching up in the future.
All right. Bye. Thanks. Be well.